So when we talk about how this is unfolding and why these countries are choosing gold instead of dollars, not only has it outperformed the 10-year Treasury 2-to-1, as we've talked about, not only is it an asset that has no counterparty liability with it if it's in your own possession, as these governments are quickly realizing, of course, but at the same time, it's outperforming, and gold continues to march higher.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for September 16th through September 23rd, 2024, while supplies last. This week, we have a very limited supply of PAMP 1-ounce silver rounds at just $2.75 over spot per ounce. We also have 1-ounce gold Rand elephants from the Rand Mint in South Africa for just $59 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Welcome back to Liberty and Finance. We're always delighted to have this widely followed returning guest. Andy Schectman is the CEO of Miles Franklin Precious Metals. He joins us for this weekly market update every week, and today is Thursday, September 19th, 2024. Andy, thanks for coming back on Liberty and Finance.
Yeah, no, I really apologize, Dunnigan. I know we're trying to do the Wednesday night live stream, and I got a little bit sidetracked with travel yesterday, so thank you for pivoting with me, and look forward to coming back with you Wednesday night next week for a live stream.
Well, both I and our subscribers and viewers love you and wouldn't miss you for the world. So we understand for everyone, life happens and travel is part of that. So
that's the truth. I mean, that should just be the title of this podcast. Life happens. It just is. It
well,
is.
And
so,
life happens. So prepare to survive and thrive. How about that?
Yeah. So thank you. I appreciate it.
We wanted to get back with you because you've been doing a lot of research, as you always do, about the progress or degress of human events that are leading to increased risk in our financial lives and geopolitically, et cetera. We've had this week the announcement of an emergency rate cut in the healthiest economy with a strong consumer and the strong labor market, et cetera, by the Fed. And we have other developments we wanted to get your updates on. So go ahead and let us know what are on the top of your mind for a weekly market update.
Well, yeah, I just think it's absurd that the way that the Federal Reserve and their open market committee applies what they believe is the preferred rate for millions of savers and borrowers and spenders and manufacturers and on and on and on. And I guess to me, what I find most humorous is how they are trying to gaslight us into believing inflation has been defeated. And it's important to understand that the CPI is a worthless statistic, and it's intended to conceal the debasement of the currency, and it's happening at a rapid pace. One of the things I found very interesting about the 50 basis point cut, you had everyone saying 25 basis points, maybe 50. We go all the way back to the beginning of the year and see how many times they've changed their strategy. There wasn't going to be any rate cuts. There was going to be 4 rate cuts. And here we are. We finally got this rate cut, a 50 basis point. And here we are. We look at gold. It's up to basically its all-time high today. Silver's up back again above 31. But one of the things that I found interesting is that actually Treasury yields went higher on the back end of the curve, and that to me signals big trouble ahead for the Federal Reserve if they're lowering rates and the back end goes higher. But that's the way it should be if you're thinking logically that a government has given in to inflation, raised the white flag and said, we're going to focus on our dual mandate of full employment, which is a bunch of nonsense. And in essence, they're doing what all governments have done. They're giving in to inflation and taking the easier path rather than tightening their belt and choosing austerity. They have done what all governments have done, and they have pivoted. And it's I don't know. I think ultimately this leads to some real problems as we continue down the road. I found it also interesting too, just in reading some articles last night about John Paulson, the billionaire hedge fund manager, who has finally said what others have figured someone like him would say, and that is that if Kamala wins the presidency, he will pull $9 billion in assets from various sectors because of what she is proposing, in particular, raising the capital gains tax, raising the corporate tax, and introducing a 25% unrealized gain on people just like Mr. Paulson. And he warned that if she were elected, that this would lead to mass selling and market crashes. And we've been talking about that. There's no question. But the bottom line is that when I look around, I see that we are at a point right now, Dunnigan, where there is no escape from not only the constantly depreciating currency, but also from this massive debt, that burden that we have that continues to grow. And I think they figured that, well, this inflation, which is a hidden tax, is a lot easier than continuing to raise taxes. And this is done at a time when, our stocks are up around all-time highs. Our deficit is at all-time highs. We've redlined the national debt. And then you get these fake numbers like the CPI and the jobs numbers. And it's very difficult for the average person to understand exactly what is happening. But when you talk about these fake numbers, like the job numbers we talked about last week, 1.3 million Americans lost their jobs, replaced by 635,000 people, most of which were in this country illegally, and part-time jobs at that. Switching gears just a little bit to gold and silver, just a couple things I want to talk about, and we can move on. We've talked a lot about over the last few years of India importing copious amounts of silver. And, their gold numbers are up very high also, but India looks at silver in a very strategic manner. They imported almost 46 million ounces of silver just in August. That's around today's numbers. That's worth about $1.3+ billion, over 45 million ounces of silver in the month of August. And you annualize that out, they are continuing on a pace that is literally draining all of the exchanges. And you wonder how long the 6 or 7 or 8 commercial banks who have been short are able to continue to play this game. It's interesting, and also in looking at the commitment of traders numbers that just came out, it's as if the commercial banks are pivoting and changing the way that they are doing things. They are covering their positions, and they covered quite a bit recently, just the other day. And I noticed in looking at where the silver came from, it didn't come from the managed money. In other words, the managed money are usually the ones that sell the silver to the commercial banks. In essence, it came from the producers this time, meaning the managed money wasn't selling, and the commercial banks pickpocketing them the way that they have been doing for a very, very long time. In this case, managed money said, no, we're not going to sell that silver to you, and it was purchased by the producers. This is telling me that we are getting very close to that moment where the commercial banks realize that being short, naked short, in a market where a country like India can import 45 million ounces of silver in a month is as stupid as a mud wall, and they're going to bail. And we can see, it seems almost as though that's indeed what they are doing. Now, I don't want to get ahead of myself, but when I look at silver today, up over $1 to 31 and change, 31.20, I think it is one of these days that is exactly what is going to happen, is that they will let it run to the upside, realizing that the only way to manipulate a market, done again over an extended period of time, is to push it in the direction that it is going. And I think they are realizing this is a game that is crossed the line of being foolish and is now into, sink or swim. And I also think we will witness a period of time where all of these commercial banks start to eat their own. It will not be about a coordinated, collusive agreement the way we've seen these 8 banks short on your interview with Ed Steer and the chart that we talked about a few times now. It appears as though they've been doing this in a coordinated, corroborated fashion, and I think that will change. They will start to realize it's every man for himself. One last thing I want to talk about is gold. And, we talk a lot about Saudi Arabia. We talk a lot about gold importation by these countries, a lot of de-dollarization. And it just came out that the Saudi Arabian Monetary Authority secretly and that's the key here, secretly purchased 160 tons of gold from Switzerland. And that was discovered because of the import data that goes through Swiss customs data. Now, most of these governments, I would argue, have been secretly purchasing gold and silver and all sorts of other de-dollarization techniques for the better part of the last 3-4 years. It's just this time the Saudis got caught with their hand in the cookie jar. And, again, in the month of August, massive imports, 160 tons of gold in the month of August. Well, how much more did they get away with that people didn't catch, or that the customs data didn't report, or that was purchased through sovereign wealth funds, through different channels that are not reported to the IMF or through customs data? I would argue quite a bit. But I read an article. There's a man named John Little, and he's a hell of a researcher, and I quote his statistics quite a bit. And he wrote something down that I just wanted to kind of regurgitate here, because when you think about it, it becomes really interesting. We talk about how gold, in many cases, at least I think it is replacing the dollar, at least on a geopolitical macro scale. You see these countries that are de-dollarizing, and in many cases, it appears as though oil has been remonetized, so has gold. These two assets are worth more than the dollars that purchased them. And he wrote something that I kind of updated it here today. It's a little different than what he wrote, but I want people to think about things this way, and why these countries are so keen on purchasing gold. With gold right now today at $25.90 and oil today at $70 a barrel, 1 ounce of gold can purchase 37 barrels of oil. And so the analogy he made was a woman's purse that could hold, he called it a 20-pound capacity purse, that could hold 290 ounces of gold. And that's not too, we always talk about you could take a backpack full of gold and run to the car. So 290 ounces of gold right now is worth at $25.90, we'll call it, 290 times $25.90, that's worth $751,000 that you could put in a purse and run to the car. Well, that is worth today 10,730 barrels of oil. So when we talk about how this is unfolding and why these countries are choosing oil or gold instead of dollars, not only has it outperformed the 10-year Treasury 2-to-1, as we've talked about, not only is it an asset that has no counterparty liability with it if it's in your own possession, as these governments are quickly realizing, of course, but at the same time, it's outperforming, and gold continues to march higher at nearly a 10% compounding year-over-year return. So these are things that are happening under the seams. But when you look at a country like India, when you look at a country like Saudi Arabia, they're showing it to you, and either you get past the recency bias and the normalcy bias, or you don't. But we are at a very interesting point in time, politically, geopolitically. And these are the things that are beginning to unfold, that I think you don't have to be a rocket scientist to see these ramifications. So those are the important things that I wanted to at least bring to your attention, and happy to chat about them or anything else that you have on your mind.
Well, I'd like to maybe circle back and hit a few points on the things you just covered. One thing is about the COMEX bullion banks potentially changing their behavior and breaking ranks. Ted Butler earlier, and now Ed Steer, have continued to warn us that they do act in concert. They act in apparent collusion, because it's simply not statistically believable for 8 different banks to all do the same thing at the same time for decades. It is interesting that they have been, according to Ted Butler, able to maintain a track record of 100% profitable trades during that period of time.
Isn't that pretty much statistically impossible?
And it can be argued that's only possible too with the concentrated short positions that they have maintained, with the salutary neglect of the regulators. The regulators just being basically absent and completely turning a blind eye to what is exactly the type of behavior that they were put in place to prevent. So before these banks could start eating each other, they'd have to have a better incentive, and perhaps survival would be that. You've talked to us often in the past, and Rick Rule has, about the difference between greed and fear being a stronger motivator. Greed has certainly been working pretty well for them up to now, because the the CFTC has got their back, or basically ignoring their back. But anyway, what are your thoughts about the absence of regulation, and whether that will this environment going forward will simply be difficult or impossible for them to be profitable playing the same game? So there will be, by necessity, a breaking of the ranks, and it'll be interesting to see how that happens, as it did.
If I had to guess, Don, again, I think they sacrificed one of their own at the altar. And if I had to guess, it's Bank of America. And maybe that's why you see Warren Buffett pulling up tent as much as he has with Bank of America. And God bless a guy like Ted Butler. I miss him already. You never know how much you miss someone until they're gone. I would have said the exact same thing about Richard Russell, and I wondered how I could ever continue to look at what at my career, at my path that Richard helped pave for me every day by reading his newsletter. I wondered how I would carry on, and I felt the same way. If I were being honest about Butler, I learned so much from him, and I wondered how would we ever continue to to get this information. And thank God we got as much as we did. And he's the one who alerted us originally, and Bix Weir also, to the fact that Bank of America had a 1 billion ounce silver shortfall, naked short position. And the same thing is true about their gold, 35 million ounces, 40 million ounces short, all of it on the OTC market. Maybe that's why he's pulling ranks. Are they going to sacrifice a bank like Bank of America? Certainly think it's possible. It would be very easy for them to do that. And much to the motto these days, find a scapegoat, it wouldn't surprise me one bit at all. And, I don't know what the trigger point will be for every man for himself. But if I had to guess, that's where it is. They will blame a bank like Bank of America, who is so egregiously short, and they'll let them take the fall. To me, it seems relatively logical if you look at the way that these actors are doing things. But yeah, like I said, it's easy to manipulate a market when everyone is pushing in that direction. It's another thing when you have countries that are going out of their way to accumulate gold and silver, and even using clandestine approaches where they're trying to hide it. But ultimately, the market wins, and the market is bigger than all the manipulations, and all manipulations end badly. So, yes, one way or the other, it gets to that point where they all start, swimming for themselves. But if I had to guess, someone's going to pull Bank of America down underneath with them. That would be my guess if I were going to make one guess into the coming months.
The next thing that you had mentioned I want to touch on is this awakening on the part of the BRICS nations and basically the rest of the world outside the Western financial edifice that have come to believe, as they have culturally forever, that their best store of wealth is in hard assets, including gold and silver primarily. And just comparing what has happened to those who have put their faith in the storing their wealth in dollars or in treasuries, and many of them, as you pointed out, haven't been cut off from access to those through weaponization of the dollar, but just destruction, just the grinding destruction. And Rick Rule just comes right out and says inflation is theft. So it's theft by design. You talked about the lying figures, the CP lie that we get, and John Williams from shadowstats.com has told us it's probably at least understated by 8% interest. So they say 3, it's really 11, that kind of thing. People know that in their gut, in their pocketbooks, but it seems like countries around the world are waking up to the fact that that's a terrible place to be storing your liquidity, is in dollars. And I know in my wife and myself, and this is just bringing it down to the individual level, over all the last half a dozen major life events, separating from an employer and rolling over a 401k into metals, passing away of our parents and any inheritance going into metals, selling our home, proceeds from that going into metals, we're up between 50 to 70% in most cases on the metals that we had acquired as assets to protect us from this destruction. Not only market risk and bank risk and brokerage risk, but just flat out in-your-face destruction and theft by the government through the currency debasement. Any comments from you on the rest of the world doing what any prudent person stewarding their finances should do to preserve their wealth?
I mean, yeah, if you look at the CPI, it's a rigged metric. It's a rigged metric where the government gets to cherry pick what items go into this basket that they're weighing, and it's completely and totally nonsensical. And all along they're talking about reaching this arbitrary 2% inflation rate, which again I've never quite understood, because why not have it negative 2%, which lower the rate the higher the standard of living. But they're 60% away from reaching their rate of 2%, and they're pivoting and moving the other direction and reigniting the inflation engine. And if you save in dollars, as Rick Rule says, you're gonna be a victim, period. And so that what these countries have chosen to do is to accumulate assets. It goes back to what Zoltan Pozsar was saying, and he's right. This is a system of who has the commodities will make the rules ultimately. So that is what we're seeing. And you look at a country like Saudi Arabia, who's trying to play both sides of the aisle, at least for now, and not upset the West to the degree that we really probably should be if we knew what their ultimate motivations were. You can see it if you're paying attention. But this is, look, the fact that they got caught importing massive amounts of gold isn't the issue. The bigger issue to me is that there's a lot that they're not getting caught on. And these countries are realizing that holding money in dollars or wealth in dollars is a game that is coming to an end. And you can see that by them lowering the front end of the curve, and the back end, the rates go higher just by a little bit. But that's the rest of the world saying, nah, we choose to hold assets differently than any duration debt instrument by a broken and insolvent country. So I think the same thing should be true for everyone, that it's, you look at the wealthy people and they're not holding dollars, they're holding assets. And that's what we're seeing on a much larger scale here. Look at all the countries that are intending to join. Look at Turkey, look at Poland. These are countries that are massively accumulating assets, and yet they're Western friendly countries. Look at a country like Turkey, who has applied to BRICS, the first NATO country to do so. They've been the largest buyer of gold for the last year, or right up there. So these countries understand the place that we are at. The problem here is that most people in this country don't, and they're going to get run over by this. And I don't know what you and I can do. We've tried our best to sound the alarm. Either you see this for what it is, or you don't. And the crazy thing is that I truly believe that the history that will be written about or the story that will be written about in textbooks and history books, we're right there right now. Over the next 2 months, it will determine which path we go down. And I don't think either administration is going to be able to right the ship economically, but can at least mitigate the path that we are heading down with this current administration. And you can see by the maneuvering of all of these countries and how they're trying to get rid of dollars quickly and accumulate assets, and even do so very privately, just how relevant this really is. And the scariest part about it all, on top of everything, including the erosion in our First Amendment rights across the Western world, where you have to think twice about the things you say and how you say it and the way you say it, is that most people just don't have a clue what is coming down the pike at us. And I don't think it's ever been more concerning. And when you see a country like India and a country like Saudi Arabia, Western allies that are doing all they can to distance themselves politely and quietly and privately from the West, it should be a big eye-opening admission. And yet our media will not tell anyone what is happening. They're more concerned about fomenting this nonsense between the two candidates and this divisiveness that we're seeing, instead of uniting us into a common a common strategy. And that's why I do what I do, and I know that's why you do what you do. But I think we are going to get into a period of time here in the next few weeks where it becomes abundantly clear just how important this really is. It goes from hiding what you're doing to outright in your face and doing it. And if the current administration retains office and you see Kamala win, and you get guys like John Paulson, massive, huge hedge fund guys, say, I'm done, I'm pulling up, I'm selling $2.9 billion worth of assets, how fast does that change the narrative, and what does that look like? So these are important times. And I think if, as Rick says, you're not a contrarian, you're damn well bound to be a victim. And it's becoming obvious that is the path we're on.
Yeah, it's like the sinking of the Titanic, and you can see all the well-informed parties getting into the lifeboats early while the band is still playing, and most people are going to get hurt very badly if they don't do what's necessary.
It's true. It's true. And you can see it. You don't have to be a genius or an economist or a rocket scientist. You just have to pay attention, and you have to stop focusing and relying upon the Western media and news sources to provide you the truth. And that's the hard part for most people, even those people that are very well read, as I've said before, just reading the wrong stuff.
Well, I chalk it up to good human-natured wanting to be able to trust. And unfortunately, we're going to be interviewing him again this Saturday, gladly so. Jim Rawls from survivalblog.com saying we're living in the age of deception and betrayal. Invest accordingly, prepare accordingly, relocate accordingly. Is that I just think it's just grates against our human nature, and it grates against our American ethics and that sort of thing to think that we cannot trust.
That's what it is. It goes against the American ethics. It can't happen here. There's no way it could. And what Jim Rawls says is very true. This is the era of betrayal and deception. And if you don't see that by now, then you're gaslit, and you probably won't. I mean, I don't know how people don't see it by now, but it's look. I've played golf at that course where Trump was shot at again, or attempted to be shot at, several times. Every time I've been there, I've seen him, and he's always come up and said hello to us, as a side note. But, it's just very surreal to me that we've had two attempts on a former president's life, and it probably won't be the last. You can tell that things are starting to get intense. I don't know, Dunnigan. I think it's one of these deals where, people need to wake up very quickly. And I know we're doing our best to help people do that.
One more aspect of that I wanted to jump in on was something you've talked about, and that is anomalies. You have pointed out before in the eye of the storm when you have an unusual combination of fairly flush product availability in terms of gold and silver investable retail product, low premiums, lower than we've seen, especially like on pre-33 gold, et cetera, and things from the U.S. Mint, not nowhere near what we've been seeing over the past 4 years of COVID and all that. And yet, prices still being, pre-launch here, if we're going to go into this turbulent time of divisiveness and everything around the election and the fallout thereafter. We just interviewed Dr. Edwin Vera, constitutional attorney, and about election chaos, on about that. It seems like this is one of those opportunities that is especially important for people to pay attention to and to take action if they've been contemplating it, because it's like, okay, we know all these wealthy countries and individuals are getting into the lifeboats, and turbulence is coming, and the ship is sinking, mathematically can't be prevented, etc. So what are you waiting for? If you have been waiting for an opportunity with low premiums and still having some availability, whereas back in COVID we were 6-8 more weeks delayed on a lot of products, etc. Just wanting to help people realize that it's time to take action.
Because for 34 years that I've been doing this, Dunnigan, it's been nothing but a head fake. It's the little boy who cries wolf. And one of these days, the wolf cometh. And that's the point. And it just appears as though, in many respects, the wolf is already here. Now, is this the one where it just keeps on running? Is it possible that we see 2,600, 2,700, 2,800? How about 3,000? You take the commercial bank suppression out of the markets, and the price of gold and silver will be massively higher. And the worst part about a long-term macro cycle, which we have been in, is that most people aren't capable of processing the fact that this could actually happen here. That recency bias, that normalcy bias will be the worst thing for people to hang on to. And you have to take a step back and look at what the most well-informed traders in the world are doing. And that is the fact that they are selling treasuries, pushing up the yield on the back end of the curve. They are accumulating commodities. They are distancing themselves from the West. They are formulating alliances and bonds, and either you believe it for what it is or you don't. And you talk about the BRICS. Yes, it's a slow moving process. But I've read just recently that now they're talking about bringing in all of these other groups from Asia, bringing in the Eurasian Economic Union, bringing in the Shanghai Cooperation Organization, bringing all these groups into the fold slowly and methodically, but you're beginning to hear more and more and more about bringing all these countries into the fold, which are representing the majority of human population. And this is something that isn't going away, yet you don't hear word one about it in here in the West. And so all of these things that you're saying make so much sense to me. Everything that you've just said makes so much sense to me and to the people listening. And it makes it that much harder for us to want to help our families and to see their reaction. We've got to the point now where I think it's you can only save the world. Starting with one person, starting at a time, with yourself, your immediate family. The noble endeavor of trying to help everyone. I think at this point, if you don't see it, you probably won't until it's already here upon you. But yeah, I think this is right now, right here where we are, almost to the month of October. Look, in the month of October, you have this massive meeting in with the BRICS, only then followed by the election. And things are going to start to get very interesting and be very difficult for people to ignore. And I guess people are they don't believe that gold and silver can continue to go higher. My belief is that gold and silver should be massively higher already, but for the actions of the 6, 7, 8 commercial banks that have done their best to maintain a Western illusion that is breaking. And it's breaking because our allies that have helped us support that illusion are breaking ranks and moving in a different direction. And India is a prime example, as is Saudi Arabia. And they're so concerned about the way that we look at this, or the way that the West looks at it, that they're trying to do it in a private manner. The same thing is true about China when they told us that they weren't buying any more gold. Baloney, the import-export numbers show that they've been buying gold. And as we talked about, through their proxy banks, through the commercial banks that are able to buy from the refineries in South Africa and in Switzerland that aren't reporting it to the IMF because it's not coming from the central bank, and all sorts of other avenues, on top of being the largest producer of gold in the world and the second largest producer of silver, and then flying all around the world buying up doré bar and concentrate so that it doesn't come off of an exchange. All of these things put together shows you the tremendous effort that these countries are putting into de-dollarizing without stepping on the foot of the king, until they have enough of a mass behind them where the king isn't as relevant as he once was. So yeah, I think we're getting there. And I keep saying this, that it's going to be crazy the few weeks leading up to the election. It just seems that we're already there. And I guess we'll be able to watch it shotgun here real time over the next 8 weeks to see how it unfolds. But I think $2,600 gold is cheap. I think we'll be north of $2,700 or $2,800 by the end of the year, maybe $3,000. Who knows? But silver at $31 an ounce is still the bargain of a lifetime. And, when you see a country like India doing what they're continually importing huge amounts of it, it ought to tell you just how important it is. And everything we've talked about with China going around the world buying unrefined silver so that it isn't noticed should tell you where it ultimately will be. You don't need to see it in front of your face at $50 an ounce to wake up. You should just see not only is it continuing to move higher, it's doing so with its arms tied behind its back. One of these days, it's going to be set free. If these commercial banks are indeed covering the way that it appears in the last Commitment of Traders report without enticing the managed money to sell, then it's a whole new game. And you will see silver go bang, just like that. And it seems like we're almost there. So you pull those commercial banks out, realizing that this is a game they can't keep fighting. Yeah, it's going to be a market that I think will be unlike any other that I've ever been part of in almost 40 years of being in finance.
And back to our roots of preparedness, again, for those who haven't been with us very long, our channel, Liberty and Finance, used to be Reluctant Preppers because we talked about having the assets that you need and the relationships that you need and the skills that you need to make it through the times that are coming. And just as most people don't understand that just because every time they walk into the grocery store, they see the shelves, stocked full of food, that there's only 3 days supply of food in our food supply chain in most cities. And after that, the shelves are bare. Those who have been through hurricane preparedness, as you and I have, know what that looks like to see the empty shelves in the supermarket. What most people also don't realize is that the retail availability of investable gold and silver to as a safe haven to store their financial future in has a very, very thin, it's like the skin on an apple.
Well, look at you're right. And that's a point I'm so glad you brought up. The U.S. Mint has already told us they're out of 10th-ounce Eagles. My guess is we won't see any new ones until 2025. We've been doing some really big orders lately. Seriously, some very big orders. And people have an affinity for Silver Eagles. We're already buying, allocations into October. At what point does the U.S. Mint say we're out of Silver Eagles until the end of the year? It's coming. It's going to be very close. And if I had to guess, and we're beginning to see that already, junk silver is becoming hard to get again. Silver Eagles are becoming hard to get again. And so the 10th-ounce Eagles are gone. And at what point does it become a realization to the masses that they need gold and silver? By then, my guess, you will see product be very difficult to get. Premiums will pop up in a very material way. And I've been begging people for almost a year. Well, I go back to November 2023 when the premiums started to drop and the availability was great. That coincided really with this AI craze and the massive increase in Nvidia and even in Apple and in Bitcoin and all of this stuff that distracted people away from precious metals and the value that we've seen. But we're beginning to see things start to disappear again. That is the opening salvo, if you will, of all of a sudden premiums going up and product disappearing. I guess we'll see how it all plays out. But if I were to guess again, that by or before Halloween, it will be a vastly different landscape for precious metals, not only in availability, but also in premium. And the way the market looks, also in its price. And when you see these big commercial banks like UBS and Bank of America and all of these other HSBC, they're all making predictions, 2,700, 2,800, 3,000, silver up to 37 to 40. These are things that we normally don't see. And maybe this is the beginning of a change in the way that the metals behave, simply because the commercial banks that have ruled the roost in the West for so long and have had the ability to suppress and move the markets with paper and with volume realize that they're up against countries that don't care about how much they short the price or they don't care about positive real yield, or they don't care about a strong dollar. They just want the metal. And that's what we're seeing with a country like India and a country like Saudi Arabia. They don't care. They just want the metal. So that's the way people should look at it, that these people know the playbook. And that's all you need to see. That's all I've ever looked at. Don't look at all the minutia. Don't get distracted. Look at what the people who know the playbook are doing. And they're doing all they can to quietly de-dollarize and accumulate commodities. And what more do you need to know? I don't think anything.
Before we wrap, and I just remembered we haven't mentioned the specials. If you could hit those quick before we let you go.
We have 1 ounce Rand elephants. That's the South African mint that makes the Kruger Rand. And those are $59 over spot. I mean, my whole career, you're not paying any more than you ever would have. Literally, that's as low as you're going to find gold for in a 1 ounce coin, $59 over spot. Next one's a little bit interesting. I've never seen these before, and they're Pamp Swiss silver rounds, and they're expensive at $275 over. But I will say this about Pamp Swiss. Pamp Swiss is one of the most respected Swiss refineries, one of the most respected refineries in the world. And I'll tell you, largely because of Costco, getting Pamp gold bars is becoming almost impossible. Costco's buying all of them, and they only allow the public to buy, 3 or 4 at a time. But it just goes to show that there is demand out there, latent demand, that, people are starting to walk by gold and say, maybe I should accumulate. But Pamp Swiss was always the easiest gold bar to buy and the most respected. And now they're almost impossible to find. I have never seen them make 1 ounce silver rounds before, but here you are. Pamp Swiss 1 ounce rounds at $275 over spot. They're almost $1 higher than normal rounds. But I think if you're going to take a flyer on something that isn't a constitutional coin, these are pretty darn cool and the highest quality.
Well, Andy, we're always grateful for your presence here, and for everyone out there for watching. Thank you for being here every week with us for this weekly market update. And please help to get the word out to your friends, your neighbors, your coworkers, your family members, your countrymen. We've got to try to protect as many people as possible. And it's simply not going to be possible to save everyone. But we've got to do what we can just as we have been since 2013 with preparedness. Make sure you've got storable food, make sure you've got fresh water, make sure you've got a means of protection, and that you know how to get the resources that you need, even if times get difficult and everybody else is looking in the usual places. That's not where you're going to find them. So, Andy, on behalf of all of our viewers, thanks again for joining us for this weekly market update on Liberty and Finance.
Always good to be here. See you next week in the live stream. Dunnigan, thanks for pivoting with me, and you have a great week as well.
This is Kaiser Johnson with Liberty and Finance, and these are the Miles Franklin Weekly Specials for September 16th through September 23rd, 2024, while supplies last. This week, we have a very limited supply of PAMP 1-ounce silver rounds at just $2.75 over spot per ounce. We also have 1-ounce gold Rand elephants from the Rand Mint in South Africa for just $59 over spot per ounce. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.